Hello, everyone. Thank you for joining us today and welcome to this free educational presentation. We give these free educational presentations weekly. And today I want to talk to you about 4 steps to trading consistency. These are 4 categories that you can apply not just to a strategy of mine or something that we promote or teach, but to any strategy you trade. Could be a system, could be something that you've purchased somewhere else, could be something that you've come up with yourself. But either way, we strongly feel that in order to achieve consistency, you must apply these 4 steps to your trading. Okay, let me give you a brief explanation of what I'm talking about. I want you to look at this chart here in Adobe. This is an older chart, and get used to this chart because we're going to be using this a lot. We're not going to be talking so much about a strategy that we teach or that we promote. We're mainly going to be talking about these 4 categories that can be applied to any market, any time frame. Now, as we look at this older chart here, someone could say, well, I don't really have a clear idea. It looked like it was going up and then it looked like it was going down. But let's say you decide that you're in a downtrend, okay? We're making lower highs, lower lows. Well, with the first step that I'll teach you, you would have known that we're not in a downtrend at all. In fact, we were in an uptrend. And once you knew that you were in an uptrend, the second step would have told you where to buy. You actually would have known in the third step where to place your stop. And then ultimately, you could have known where to exit using the fourth and final step right here. And potentially using these 4 steps I'm going to be sharing with you today, you could have potentially captured upwards of 22.5 points. So this is the subject of today's educational presentation, 4 steps to trading consistency. And you'll know exactly how to apply them as soon as we complete today's presentation. And everything you're seeing today is displayed coming on our platform. This is the PTS Primo charting platform I designed and developed with Pro Trader Strategies that actually teaches traders how to trade. So welcome to this educational presentation. My name is Steven Primo. I am the president and founder of Specialist Trading. I've been trading now for 48 years. I started trading on the floor of the Pacific Stock Exchange, where I was on the floor for 16 years, and 9 of those years I was a specialist, where I made markets in roughly about 30 to 60 stocks at a time. I made markets during the crash of 87 and the bull market that followed after that. And then in the mid-90s, I left the floor to manage money and to trade my own account. And about 15 years ago, I teamed up with Pro Trader Strategies, and we formulated Specialist Trading with one goal, and that was simply to educate traders. And you'll see that dedication to education in today's presentation, where we feel that that's really what's missing from most traders' trading plans. It's not the perfect system. It's not the perfect strategy. It's not the amount of years you've been trading or what type of hardware you have, what type of platform you're using. It's really about knowledge and education, because that's what they say will set you free ultimately. So that's our goal, to provide you with these things that I've accumulated in nearly 5 decades so that you can become the consistent trader I know you are searching for to become. And you'll see that in today's class. Now, before we begin, we're required to share this with you, so please take a moment to view our disclaimer. I'm going to show you a lot of performance results by applying these 4 steps, but please remember that we can in no way guarantee that any of the results I'm about to share with you will be repeated in the future. And since we are an educational company, all examples are strictly for educational purposes only. Now, I say this every week, but if you haven't done so already, please feel free to follow us on Twitter or X, however you like to call it. We still have a lot of people calling it Twitter. There's our handle right there, at SPCLSTTRADG. Every day I post upwards of 5 or 6 different snapshots of strategy signals that have been recently generated to little bits of financial wisdom. So there's lots of great free education on a daily basis. Please feel free to follow us on Twitter or X. Okay, so let's begin today's educational presentation. We're going to be talking about these 4 steps, but I'd like to start out with something that my mentors actually taught me, and they said, Steve, trading is really simple. It's the trader who makes it more difficult than it has to be. And at first, I didn't really understand this, what they were telling me, because I was doing everything I had been taught. I was waiting for all the earnings estimates to come out. I was listening to all the trading gurus. We didn't have blogs, or we didn't have the internet then, but we had a lot of reading material, and we subscribed to a lot of different documents and newsletters. I was watching all the guys on TV, and I had about 50 indicators plotted on my screen, and I was wondering, how come I'm not really prospering? How come I'm not seeing the results that I was promised if I used all these things? And it's because I was doing the same thing that most traders do. I was overcomplicating my trading. But as my mentor said, trading is really simple. It's the trader, not something outside of the trader, but the trader who makes it more difficult than it has to be. So it wasn't until I started simplifying my trading that I started to become consistent. And that's what we teach in all of our courses and all of our trading philosophy is to keep things as simple as possible. There is absolutely, in my opinion, no need to follow any news events. There's no need to look at more than 2, possibly 3 indicators at a time. There's no need to have more than one screen in front of you, one desktop in front of you. I mean, keep things simple. These things will not make you any more successful, just as buying the most expensive pair of running shoes will not turn you into a world-class sprinter where you will be able to run in the Olympics. We just have this false sense of security that we think that the more complicated things are, the more closer we'll be to success. And in all actuality, what I've learned in 5 decades is it's the opposite. They keep us away from success. It's the simplicity that really makes it much easier to become a consistent and successful trader. So you'll see that in these 4 steps that I'm going to be teaching you today, how simple they are, but how much they can help you become that consistent trader. So in order to be consistent, you must always ask yourself these 4 questions prior to the trade. This is prior to pulling the trigger and to actually having a long position or a short position. But you must ask yourself these 4 questions. So let's go down each step, all right? Step or question number 1 is, am I on the right side of the market? Now, I know everyone thinks they're on the right side of the market, right? Everyone says, well, I bought that, and I looked at all my indicators. I looked at everything that the system or the strategy said. I looked at the patterns to make sure that the moving averages were crossing, and the indicators were telling me that I was on the right side. In other words, I was in sync with the trend. Well, if that's so true, if that works so well, and everyone thinks they're on the right side of the market, then why do 80 to 85% of all traders fail? It's because you're not on the right side of the market. I mean, think of it. If you buy something and it goes lower, you're not on the right side of the market. You're not in sync or doing what the market wants to do. Or if you sell, and I don't mean sell or exit a position, I mean sell short or buy some puts, and the market goes higher, obviously you're not on the right side because the market is doing the opposite of what you think it should be doing. You're out of sync. So we have to be on the right side prior to pulling the trigger, prior to even deciding what we want to do. Let's take a look once again at our old friend Adobe. Once again, just looking at this basic price chart, it's hard to tell what it wants to do, right? I mean, we're going up, going back down, then going back up again. But the first thing we tell our students, regardless of what market, regardless of what time frame, is to apply the 50-period moving average. We call this our buy-sell line because it tells us whether we should be a buyer or a seller. It gets us on the right side of the market. And here's the first question you have to ask yourself. Where is price in relation to the 50-period simple moving average? Obviously, price is above, and the majority of price bars are above. So if price bars are above, well, then the overall trend is up. And we will never be out of sync with the overall trend because that's how we get in sync with the market. That's how we're on the right side of the market. So you will never sell short or buy puts if you're a student of mine and price is above the 50-period moving average. Conversely, if price is below, you will never buy. You will never go long, even if it looks like it's the bottom. The odds are in your favor. If you want to be a consistent trader, the odds are in your favor if you follow this simple rule. So where is price in relation to the 50-period simple moving average in front of you? Well, it's above. So the overall trend is up. All right, so you say, okay, the overall trend is up, so I guess I should be a buyer then. Okay, well, I was thinking about selling, but I guess I should be a buyer. And let's say you follow candlestick. You're a candlestick trader. So you say, all right, well, here's a bullish engulfing pattern. Steve says I should only be a buyer. Okay, well, I'll apply this as my strategy. And that means if I trade above here, then I'll buy, all right? Okay, that's all right. You're in sync with what the market wants to do. There's no guarantee that's going to work, but at least you're in sync and you've given yourself a chance. The odds are now in your favor. This now takes us to question number 2, or the second step. Ask yourself, where do I place my initial stop? I know a lot of you are most likely saying, well, I thought we would say, where am I going to get out with a profit? No, we don't really have to worry about that yet. The first thing you should always worry about is, what if I'm wrong? See, traders almost never think about being wrong. They always think about, oh, I'm going to make so much money on this trade. It can't fail. It's going to really go in the right direction. Once again, 80 to 85% of all traders fail. So you have to protect yourself. So where do I place my initial stop? Well, we have in our courses upwards of 6 or 7 different stop placements for every strategy or technique we trade. I'm just going to share with you probably the most basic and generic stop there is, and that's looking for the most recent low. So in other words, if we were to buy here, what you do is you go backwards and see where the most recent low was, which is right here. Now, the way you figure out where a low is, you kind of have this V approach. As you can see here, you have a low followed by a lower low, followed by a higher low. So that's this kind of a pivot low here. And so what you want to do is place your stop just somewhere below that or at that point, okay? All right, so now we know where we want to enter. And now we know where we want to place our stop if we're wrong, where we're going to be getting out if we're wrong. Okay, those are the first 2 steps, which brings us to step 3, or the next question, and that is, what is my profit target? All right, now we can talk about if we are going to make money. And this is the reason why we firstly wanted to know where our stop was, because that is going to help us determine where we're getting out. Remember, you can apply these to any method, any strategy. It doesn't have to be one of mine. It could be one of yours or someone else's. But the first thing you want to do is determine where you're getting in and where your stop is if you're wrong. Now, that will help you determine what your profit target is. How do we do that? Well, let's go back to the chart once again. If we were to get in here, and if the trade automatically went against us, how many points would we lose? Not how much money, how many points would we lose? Well, you simply find out where your entry point is and where your stop placement is. And in this case, it would be 11.25 points. So we have to ask ourselves, well, are we willing to lose 11.25 points? Do we have enough account size to manage that? If you do, or if you want to buy an odd lot, if you say that's fine, okay. So what you want to do is double that amount all right, so 11.25 points, what you want to do is double that from where you would be entering. And that comes up to 22.5 points. And that level is where you place your exit right here. And in this case, it would be at 247. So now we have determined where our exit point is and where our buy point is and where our stop placement is. And basically what we're doing is we're using our risk parameters to tell us where to exit. We are making twice what we're willing to risk. This is called a risk-reward ratio. We're willing to risk a certain amount and we want to make double that amount. If you are in sync with the market, if you have an adequate enough risk parameter and you double that, you will be a consistent trader using these first 3 steps. Which leads us to the 4th step and the 4th question, which is, how do I protect my profits? Now, one of the worst feelings you can experience as a trader, I know myself included when I have felt this in the past, it's a terrible feeling, is to have a profit on paper and to see the trade going well in your favor. And then you walk away, or perhaps a couple of days happen, and then you wake up one morning and all of a sudden something happened and it's gone straight down overnight. And now what once was a nice profit is now a large loss, right? This is one of the worst feelings in the world because you were doing well. It's almost like watching a sports team and seeing the basketball game. You're winning by 20, 30 points in the 4th quarter, and then you lose everything in the last final minutes, okay? You had the game in the bag and you gave it away. It's no different from trading. You had a really nice profit. You hadn't exited yet. You were waiting to get to your exit point, but you gave it away. It turned into a huge loss. So here's how we protect our profits. We're going to use something we call the 50% rule. It's more like a 50% suggestion because it's entirely up to you. But what we want to do is, if we entered at this point, which is 224.50, and we exited at this point with a profit at 247, we want to see price get to the half level, 50% of that move, which would be right here roughly. And if we see price get close to or touch this level, then we will move this stop to unchanged. So basically, we won't be risking anything. That means that if price gets up to the 50% level and then all of a sudden just turns around and takes a nosedive, well, before we lose 11.25 points, now we don't lose anything. So we rack it up to a learning experience. At least we broke even and we're have enough money to come back and trade another day. So this is the 50% rule or the 50% suggestion, because it doesn't have to go exactly to 50%. Some people say, well, Steve, I didn't move it there because it hasn't touched yet. It can be anywhere near there. It can be anywhere above there. But just as long as you get close to this half point level. Excuse me. Let's watch the trade unfold here. So we see nothing really happened on the first day. We didn't enter yet. But on the second day, we did. So now we are long. We've entered into the trade. We have our stop. We have our exit point, and we know where the 50% level is. See how all of this has been done even prior to the trade. This is what real planning is. So what you want to do is sit back and watch, and it's going in our direction. And lo and behold, we get to that 50% level. So now we are no longer leaving our stop here. We are moving it to where we entered to break even. We move stop to our entry price, and now we're playing with the house money. We're not risking anything, okay? We're just watching. We're either going to have a profit or we're going to break even. Now, a lot of our students say, well, Steve, I like to trade multiple shares, maybe 100 to 200 to 300. Okay, well, then if you have a couple of hundred shares, let's say, a lot of our students will exit half their position here, say 100 shares, take the profit, and then move their stop to break even for only 100 shares, because that's all you have left, and exit with only 100 shares. Still, some students will like to say, well, Steve, I'll exit everything at this price. And we even have some students that say, well, I'll exit the majority of price at the 50% level. It's entirely up to you. But this is where we say we are educating now so that you can decide. This is not a system. We do not believe in systems as specialist trading. We're an educational company, and we simply want to educate you so that we can put the power back in your hands. So we've done all this. We have our 50% level now. We've moved our stop to unchanged. Now the only thing left to do is to watch the trade unfold. And as I always say, if you are trading correctly, if you are doing everything right, what we've just shown you here with these 4 steps, trading is very boring. It really is. It's like fishing. You simply cast your line and you wait, right? Fishing is not something where you're standing up and running back and forth and you're yelling and you're on the phone and you're screaming and you're having 2 or 3 fishing poles at the same time. No, that's not real fishing. The same way that's not real trading. Sure, maybe they do that on the floor. I used to do that on the floor when it got crazy. But most of the time, trading is very boring. And it should be. Because if it's boring, then you're doing it correctly. Half the time I'm watching TV, a movie. I'm not watching anything financial. I don't watch financial news. I'm watching a movie or I'm listening to music because I'm waiting. That's all I'm doing. I'm waiting for the trade to unfold. Most of the time, my price level hasn't been reached, but I've hit the 50% level. This morning, I raised my stop. Actually, I went short the market. I was intraday trading the mini futures. So I lowered my stop to unchanged. I took half my profit at the 50% level, and I took the remaining portion of my profit at the exit point. And that was it. I just kind of waited, and that's my only trade of the day. I had a nice profit, and I just waited. And that's the way trading should be. It's very simple. Remember, trading should be simple. It's the trader who makes it more difficult than it has to be, because for some reason we've been taught the more complicated something is, the more loud, the more brash, well, that's going to take us to something that's more successful, right? It's actually the opposite. The more simple something is, the more boring something is, you'll actually be closer to becoming a consistent trader. So let's see how the trade unfolded. We've moved our stop to unchanged. We have an exit point right here. We're not risking anything. And let's see, in the coming days, it kind of hovered up and then went lower. Now it's going sideways, but now it's starting to firm up again. And then ultimately, we touched the exit level and made 22.5 points. All right, simple as that. Let's look at another example, okay? Now this time, we're going to be looking at technical analysis. Let's say you're a technician and you say to yourself, well, Steve, I've studied all the technical analysis patterns. I know all about them, and I ask you, well, how are you doing? Well, I'm not doing that well, just kind of breaking even. Well, let's follow the steps and see how these 4 steps could improve your trading and help you become a consistent trader. Let's say you're looking at this older chart in FSLR, and you say, well, this is a bullish wedge, Trading 101, classical technical analysis chart. And what this usually signifies is that if we close above this downward trend, this wedge trend here, this means you're most likely going to go back up and make new highs. A very bullish pattern, but you have to close above here. So you're waiting to buy here because the market is telling you it wants to go higher, right? And then lo and behold, the next day it does. It actually closes above that downward wedge here. So you say to yourself, I'm going to buy. And you're all excited because you think you're going to have a nice big profit here. Maybe you even bought the calls. Who knows? It doesn't really matter because you can apply this to anything. So you're long. But did we follow the 4 steps? Because the first question you had to ask yourself is, am I on the right side of the market? Now, this brings us back to where most students say, of course I'm on the right side of the market. That's a technical pattern there. It's very prominent. That's a very bullish pattern. So yes, I'm on the right side of the market. Well, are you really? Because the way we define being on the right side of the market is by applying the 50-period moving average. And then we ask ourselves, where is price in relation to that 50-period simple moving average? Now, originally price was above, but look what's happened. 1, 2, 3, 4, 5, 6, 7 closes below. That is more than enough to tell us that the overall trend is down. And remember what we said, we will never be a buyer if price is below the 50-period moving average. Why? Because the odds are not in your favor that that is going to go higher. Sure, every once in a while you may see it go straight up. That's great. But I always give this analogy. It's like the slot machines. Every once in a while, if you play the slot machines, every once in a while, you will get a nice little jackpot, you know. That's just enough to keep you staying there because they've been designed and developed to keep you there. Because they know if you continue to apply that method and staying there and trading or pulling the slot hand, you'll give it all back. So if you trade the slot machines, you're going to give it all back. It's the same way with buying below the 50 and selling short above. Sure, every once in a while you may have a really nice winner, but if you do that over time, you're going to give it back. How do I know this? Because I gave it all back when I was first started trading. That's the way I used to trade. I was always looking to sell at the highest high and buy at the lowest low. And every once in a while, I'd have this phenomenal trade where I'd hit the bottom and I was, astounded how I knew. And then weeks later, I'd give it all back because it didn't work again. So as a trader, you don't want to be trading like that. There's no consistency in that. You're basically just, riding high in April, shot down in May. A consistent method is one that has a nice upward slope in the P&L. So this is what we're looking for when we want to only be in sync with the 50-period moving average. So as I said, you should not be buying this because we're below the 50. So you don't want to buy it. You actually want to be a seller. All right, so you say to yourself, okay, well, I guess I should renege my buy there. I'll get out of that trade. And I'm glad I did because look what happened. It went lower the next 2 days. And so I'd be left holding a long position that didn't look like it was doing well. So let's say we're going to develop this and say we're going to be a seller. All right, well, we can still use any method. It doesn't matter. Once again, it could be a strategy that someone else sells. It could be a technique of yours. It makes absolutely no difference. Let's say that you said to yourself, well, this looks like there's major support there or some type of ledge. I'll just say if we break below that, I'll go short or I'll sell short or I'll buy some puts. Okay, well, that wouldn't be what I would do, but hey, at least you're in sync with the overall trend. And that's a good plan because you've done and followed through with the first step. And so this is where you're going to decide to sell. If we trade just below that little ledge there, that little support line. Which brings us to the next step, the second step, question number 2, we ask ourselves is, where do I place my initial stop? Once again, this is the exact same as what we used before. In the course, we will give you upwards of 6 or 7 different stop placements, but just to keep things simple, let's use the most generic, and that's the most recent high. So if we were to go short here, where would the most recent valid high be? Well, this is not a real high here. We have to go all the way back to here. At this point, we have a high followed by a higher high and a lower high. So this is where the most recent high would be. Now, if that meets your needs and you say to yourself, yeah, that's fine. My account size can handle that. Okay, well, you place your stop there, which now takes us to the third step. Question number 3 is, what is my profit target? So once again, we go back and we say, if we were to get short right here and we were wrong, say all of a sudden it went straight up, how many points, not how many dollars, we're not concerned with that yet, how many points would I be losing? And in this case, it would come out to 8.20 points. Now, if that meets your account size, if you can handle that loss, either financially or emotionally, a lot of people say 8 points, I couldn't sleep at night, where some people say 8 points, that's nothing. So you have to ask yourself, can you handle that financially and emotionally? If the answer is yes, then what you want to do is simply double that and subtract that from where you would enter. So that would be 8.20 times 2 is 16.40 that you would subtract from this point, 16.40. And that will tell you where you will cover, which would be at 51.15. So you place a limit. You see how you've done and taken care of all of this, and you haven't even entered the trade yet. You haven't even pulled the trigger. This is what true professional traders do. They plan before they even get into the trade. Most traders do the opposite. They say, oh, it's going up. I just got to buy at the market. Well, where are you getting out? Well, I'll figure that out as I see the trade unfold. Well, where are you placing your stop? Oh, I don't need a stop. It's going to go straight up in my direction. Well, how about if it doesn't go? Well, that's okay. I'll just figure it out when it's happening. This is the way most traders trade, just totally on a whim, like a leaf at the mercy of the wind. You have to have a plan in place, and these 4 steps can help you tremendously. And now we come to the fourth and final question. Once again, how do I protect my profits? Well, we use our old friend, the 50% rule of the 50% suggestion. It's up to you. So if we were to get in here at 67.55 and we were to exit with a profit at 51.50, well, our halfway point would be roughly right here. So we know that if price comes down in our direction and meets somewhere near this 50% level, we will take this stop, cancel it, and move the stop to unchanged. So let's watch the trade unfold. Well, 2 days, we've got a nice profit, but once again, it's only on paper. But now we've come to the 50% level, so we are canceling this stop and moving it to break even. And now, once again, the only thing left to do is watch the trade unfold. We are fishing, and we have everything set in place. All we do now is wait. There's no reason to have 3 or 4 screens we're looking at and tons of indicators. There's no reason to be yelling on the phone and typing tremendously. Trading should be very boring if you're doing it correctly. So let's see. We've moved our stop to unchanged. 1 day, 2 days, 3 days, and 4 days, we get to 16.40 potential profit, okay? That's how simple trading can be when you get out of your own way. Those are the 4 steps to trading consistency. And as I said, you can apply them to any market, any time frame. It doesn't matter what strategy or what system you're using or what technique. Could be something of mine, could be something you put together. It makes absolutely no difference. But if you apply these 4 steps, I can almost guarantee you that you will increase your odds for consistency dramatically, okay? So let me tell you about our special offer today for all of you taking the time out of your Wednesday to hear me speak. We're going to offer you our Trading Floor Edges course. This is a 10-video course which includes over 48 years of trading experience, okay? Many more high probability trading edges, like 2 techniques that will elevate your trading. Once again, how to be in sync with the overall trend, but I'll share with you 3 more different ways on how to be in sync with the overall trend. 3 steps to a successful trade. These are 3 more steps that you can include to becoming a successful trader. How to fine-tune your entries. Next level exiting techniques. But I think this is probably the best thing we have on this 10-video course. This is what we call a superior candlestick trading edge. Let me show you what I mean here. Let's look at this chart in PLTR, okay? Excuse me. Obviously, we're in an uptrend, okay? Now, as with most candlestick patterns, they're reversal patterns. So what you're looking for is a trend to reverse. So if we're in an uptrend, we're looking for a pattern that's telling us that that uptrend is over. And here we have a dark cloud cover pattern, which is a very negative pattern telling you that most likely the trend is going to go lower. And then just days later, we have a bearish engulfing pattern, which is a very strong pattern telling us that the market's going to be going lower according to traditional candlestick trading wisdom, okay? So you're all excited. This is the way most candlestick traders trade. And you say, wow, I'm going to sell here. I'm going to make a lot of money on this trade. 2 candle patterns that are telling me the trend is going to change. So you go short, maybe you buy the puts, maybe you sold short the stock, and then this happened, all right? Look familiar to anybody? Well, we feel that most traditional style of candlestick trading isn't really that consistent. And what we've done is we've incorporated our own techniques and method to give you this superior candlestick trading technique, because what we would teach our students is not to sell here at all. In fact, you would have not sold, but been buying right here, a bar before that, and potentially captured this really nice upward move. So this is what we call our superior candlestick trading edge, and it's included in our Trading Edges course. So you'll get all this, and remember, all the things we are including you can't find on any other trading package or any other trading platform. Why? Because most of these things have been techniques and methods and strategies and trading methods that I've accumulated from my days on the trading floor. And you won't find them on the major trading platforms. You'll only find them in this Trading Floor Edges course. Now, the 10 video trading floor courses usually runs for close to $1,000, $997. Here's what we're going to do. For taking time out of your Wednesday, we're going to slash that price tremendously and take it down to only $19. I mean, think of that. You can't even go out to breakfast for less than $25, $30 these days. But for $19, you'll get close to 50 years of trading floor edges that I've accumulated that are yours to keep forever. This is a really phenomenal discount, $19, but it's only for a limited time, probably just until Friday, and then it goes back to $997. So take advantage of this great offer. Remember, you can apply any of these edges to any market and to any time frame. Now, we're also going to include an extra bonus. We're going to take it up a notch. Along with your purchase of the Trading Edges course, we will also include a 50% discount on any other product we sell. So think of it, any strategy, any technique, any indicator, you will also get 50% off. So this is a great, great way if you're a new student to become acquainted with us. If you've already been a student of ours, you can still get all of these trading edges and still get 50% off anything else we promote and teach. You owe it to yourself to take your trading to the next level. You spent a lot of time and money on so-called magic systems and phenomenal trading strategies that are supposed to make you a successful trader, and you know they haven't worked. Well, for $19, we feel you can really turn your trading around. This is just one way to become a consistent trader, and we really want to help you. We're really showing you that we really have a lot of dedication to making you a consistent trader for such a low price. Here's how to take advantage of this offer. Contact my sister site, Pro Trader Strategies. I would give them a call at this number, area code 310-598-6677. They have trading consultants manning the phones right now. They would be more than happy to take your order over the phone or answer any questions about the 50% off on anything else that we teach and sell. Now, that link you see at the bottom is the link that will take you to the info page on this particular promotion. As well, you can sign up online if you'd like. That's not a live link, though. You'd have to copy and paste that. But Pro Trader Strategies has posted a live link in the chat box. So if you click on that little chat icon, you'll see that there's a live link there, okay? Now, I'm going to leave this information up here, as we always do. I'll reserve the last 5 or 10 minutes for any questions. If you have any questions concerning what I went over today, be happy to answer them for you. Just go to the chat or question icon, type them in, and I'll answer them right away. Someone's asking, can these techniques and methods work on intraday trading? Yes, they can be applied to any market and any time frame. It makes absolutely no difference. For example, I said I was trading today using these 4 steps that because I use them in my own trading and my own strategy. Now, along with that, I also had a 50-period moving average the same way. So it makes no difference if I'm using that 50-period moving average on daily charts the way I shared with you, or if I'm using them on a 10-minute chart. It makes absolutely no difference. I could be using them on a weekly chart. The same process applies to any market and any time frame. And one of the best things is we know that a lot of our students trade multiple markets. Someone can trade currency pairs along with crypto. Well, that's great. There's nothing you have to change or something extra you have to buy for those particular markets. Everything can be transferred easily onto those other markets, and you don't have to alter anything, okay? So that's a good question. Someone says, do these indicators repaint? Oh, well, for those of you who don't know what that is, many indicators that you'll find out on different trading platforms, what they do is they recalculate, okay? And that's called repainting. So while you're watching them, they may say something, And then when the bar closes, they say something entirely different. And so we've never subscribed to that type of teaching or trading, because we want things to be simple and cut and dry. And they can't be simple and non-complicated if they're changing. If you're relying on an indicator or a tool to tell you whether to buy or sell, well, if price is above the 50, we know we're only going to be a buyer. It never recalculates. It never repaints. If price is below the 50, we know we're only going to be a seller or have a seller's bias. We will never recalculate or repaint. So no, none of our methods, techniques, or indicators ever recalculate or repaint. What you see is what you get. Okay? It's a good question. Any more questions while I have me here? Remember, if you're interested at all, $19. Trust me. I mean, I went out to breakfast the other day and it cost me close to $50, and it wasn't anywhere fancy. It's just for two people having a nice breakfast, and a coffee is going to be, with the tip included, close to $50. Well, for $19, you're getting close to 5 decades of information that I've accumulated. It's taken me that long to accumulate, and it's yours to keep forever. So take advantage of this great offer. Remember, contact Pro Trader Strategies. They're there to work with you. They'll answer any question you may have and tell you more about the 50% discount. Give them a call at 310-598-6677 before this offer runs out. Okay, and then it goes back to close to $1,000 altogether. Okay, if there are no further questions, let's take one last look at our disclaimer. And I just want to thank you so much for attending today. I hope you learned something. Paper trade these 4 steps to consistency. I'm sure you will find out right away how they could have helped you, either by not losing money or by having more winning trades, because you will, for the first time, be trading like a professional trader. Okay? As we close, I just want to say thank you so much for attending. I really hope you learned something, but most especially, I look forward to seeing you in class and to have you as a student of mine in these trading course edges, okay? Thank you so much. I'll see you in class. Bye-bye.